All right. Hey, everyone. Good morning. It is 8:30, almost on the dot. I've got an awesome special guest today here. Super excited to have Addison Taylor on the line. Addison, can you hear me?
Hey, good morning, Spencer. How are you?
I'm doing great. Thank you so much. Thanks for joining us today. I'll give a little bit of an introduction to Addison, and then I'll let him fill in. So basically, Addison plays a really, really important role in Caldwell County Barbecue, our restaurants. And he works there with me, and we're so excited to have him on the team and thankful for everything that he accomplishes. And he's taught me a lot of really, really cool things, and we're going to actually teach you this thing today. So I'm excited about that. Addison, I know you bring so much value to Caldwell County, and I'm thankful for that. I'm thankful to have you, like I said, a part of the team. And thank you for all you do over there at Caldwell County. I really appreciate it, bud.
Absolutely. Thanks, Spencer.
Go ahead. Yeah, just fill them in with just some of your important roles that you do over there at Caldwell.
Yeah, sure. And a bit of my backstory, I've done restaurants for over a decade and also done finance for over a decade. So master's degree in financial planning, as well as a CFP at an AFC. I like numbers, but I like people more, and so I like to combine the two. But right now for Caldwell County, I'm acting as the CFO / operations. So basically whatever Travis doesn't do as the CEO, I'm wearing that hat for him, whether it's HR, P&Ls, bookkeeping, accounting, employee benefits, 401k management, and basically everything in between.
Awesome.
So, yeah.
You have a lot on your plate, and like I said, just sincerely thank you for all that you do. So let's talk a little bit about your background that you mentioned just briefly. Tell us some of those things that you did. That's kind of exciting to me, and I think others.
Sure. Yeah. Humble beginnings. My first job, 15 years old in Dubuque, Iowa. I got paid $5.25 an hour. The boss liked me, so I got 10 cents more than minimum wage at the time. It's a good time, but worked in restaurants for a long time. Worked my way up to become a general manager of multiple stores, as well as a area manager running multiple stores at the same time. Had some very successful store opens for a company called Jimmy John's over in Utah. That store is actually still the most profitable and highest volume store to this day, years later, from the people that I trained there. But loved it. Finished a degree in personal financial planning. Came over to Vanguard, was a high net worth financial planner, managed about $250 million in assets for clients, and did a lot of other stuff for the company in terms of training other advisors and, getting about 1,000 of them trained into this advisor guidebook that I helped create. But that was a lot of fun. And my brother, who's worked in restaurants for even longer than I have, when he and I came together and said, let's really run this business with the Caldwells to enhance it and move it forward. It was exciting for me to have a bit more discretion in terms of how do we make a company great and how do we take care of the people while making sure the numbers make sense.
Nice. I love it. That's really, really cool. Thank you for that explanation. I really appreciate it. Addison's got a lot under his belt. So as soon as he got on, obviously with all his experience, and just keep in mind, we're not CPAs and we don't give tax advice or those type of solutions as a profession. So these are just some of the things that I'm excited about. And so we're going to share some things with you, but we're not professionals. We're not your tax guy or your CPA. So take that for what it's worth. But as soon as Addison got on, he, of course, I'm always thinking, taxes, we all just want to pay less taxes in a legal way. And so we're like, hey, how can we pay less taxes? And he brought up this really cool and introduced this really, really cool thing to me called the Augusta Rule, correct, Addison?
It is, yeah.
And tell us a little bit about where the Augusta Rule came from.
Yeah, my understanding, the Augusta Rule came back from a place, I believe it's Augusta, Georgia, where they used to hold, I probably still do, hold a big golf tournament every year. And back in the day, it was a smaller town, not a lot going on in terms of the rental side of things. But then for about 14 days out of the year when this tournament was happening, everybody with houses near the course were able to rent it out to people. People were constantly saying, hey, I need a place to stay. Can I stay at your place? And so they would rent it out and get paid for that. I don't know if it was a politician or a friend of one, but essentially someone said, hey, this isn't a business. This is just once a year where, we happen to be in a place where everybody wants to rent. Can we do something about the taxability of this? And so the law was passed. This is IRS Section 280A, Topic 415, if you're looking in the tax topics there. But they essentially said you can rent your personal dwelling up to 14 days a year, or 10% of the total days you rent it to others at a fair price in terms of income. So as long as you're using the dwelling for yourself, it's your primary residence, and you're renting it for 14 days or less, you can actually receive all of that rental income tax-free. We'll talk more about how to value that rent, but there's no cap necessarily, as long as it's a fair market value for that rent.
Okay, cool. Okay, so I hope you guys are taking notes. Obviously, this call is recorded and it's posted later on my YouTube channel, so you can go back there and take notes if you want. It'll be posted in the next 24, 48 hours. So I'm just going to recap kind of what he covered, and then we'll dig a little bit deeper, just a few more minutes into this. So it's called the Augusta Rule, and the cool thing is I think everyone listening on this call probably has an LLC, and if you don't have an LLC, that's for another call that I can maybe go over how to create an LLC. But you need to have your business, an LLC. And so and let me just reverse a little bit too. I got a call or text from Addison and Travis, and they're like, hey, we're going to have basically a company retreat, which could be also a meeting, and we're going to have it at your house, and we're going to pay you rent to do that. And so I'm like, well, heck yeah. I mean, so they literally, we had a company meeting, we had a swim party, and they bring over a rental agreement, and I signed the rental agreement, and they hand over a check to use my house, which was really, really cool. And so as Addison said, you can use your personal dwelling, which is your house, to have business meetings, company retreats, that type of thing for 14 days or under per year. And that rental income that you use for your personal business and meetings or retreats is tax-free. And there's not necessarily any cap on the rental amount, but it needs to be fair market rent. Did I recap that? Did I re-say that kind of good, Addison?
No, that's perfect. And a side note on that, there's specific documentation you want to do to keep the things above board. For instance, Spencer at the end of the year is going to receive a 1099 MISD from the company that rented his premises for the company retreat. We're going to say, hey, here's money that we paid to you on a piece of paper. And then when Spencer files his taxes, he will actually cite the IRS tax code 280A and say, hey, under the Augusta Rule, this 1099 MISD is all tax deductible, meaning he's not going to pay anything on that income.
Perfect. Okay, cool. So what I'm hearing is a way for you guys on the line today to save money is to implement the Augusta Rule into your businesses. Just get with your tax guy, your CPA, or whoever, and just make sure that you are filing it and doing everything correct. But if you've got an LLC or business, you definitely need to start renting your house back to yourself for those meetings, those retreats, those type of things to save on taxes. I just think it's a great strategy to do. How did you guys kind of figure out, like, you said it's rental income that's tax-free for these meetings or retreats that you're having at your house, right? And you said there's no cap on the amount. How did you kind of find out the market rent that if they're having it at their house, they're having their company meeting at their house, and they want to pay to make that happen out of that business? How did you go over like rental rates?
Sure. So you can use different websites. So the one I used in this instance was peerspace.com, peerspace.com, Peerspace. I like them because you can toggle the parameters to essentially a business meeting, or you want to look at a whole house rental in this case, right? Because in your contractual agreement, you have a little one-page contract for the person renting. You as the owner of the home, right, or the residence, if it's a primary, there's some sticky rules about how much you use it for personal use versus rent it.
Right.
We won't dive deeper there at the moment, but peerspace.com, you can actually look geographically for the number of whole homes that you can rent out. And I picked 4 or 5 that are really close to the zip code of each of the owner's houses. And so, one of the owners lives out in Santan, which is less populated at this time and less in demand in terms of real estate. Houses are cheaper. The cost to rent a house is cheaper. So they might do $120 an hour versus somebody who's in the downtown or upper metro or upper scale Mesa area could be $225 an hour. So you find those surrounding houses and find an average rate between those. And I played it down to be on the safe side, and then took screenshots and documentation of how I got this rate at the time. And then the contract itself can say, hey, doesn't matter what you're doing, you have to rent at least a minimum of 3 or 4 hours, for the house, right? Because there's that, and then there's the setup and takedown and even the cleaning fee that you can put in there. So you can kind of make it so that, $5,000, $6,000, $7,000, $10,000 a year, you're receiving income from the business, which is tax deductible to the business, which is a big deal, but also tax deductible to the owner, right? So it's a business expense that you're taking, and the owner gets to receive it. And if your tax rate is 30%, you're saving $3,000 in taxes from that $10,000 of Augusta income.
Wow, that's great. Man, that is just jam-packed full of awesome information. So as far as like that rental agreement that you brought over that I was to sign, and was that just a rental agreement you found online or you created yourself?
We essentially created it, but it was based off of enough information to where we had something in place already, so that helped us.
Yeah.
But yeah, it's fairly simple and straightforward. It's an agreement between the tenant and the landlord in this case, talks about what the premises are, talks about what's available in terms of amenities, right, a pool or equipment, that kind of thing. And then it talks about the term of the lease, if you will, or rental space. And then it talks about the other information that may be tacked on to make it an appropriate rental, right? The IRS needs it to look reasonable. You can't just be, going crazy on some of these things, right? It has to be reasonable. But if you're holding monthly meetings that you would normally hold, you hold them over at a property, and even put in some food and have a food cost or something, you can have a great experience for your team, but also receive the tax-free income as a benefit for you.
Yeah. Hey man, this is some awesome stuff. This is something new to me that I just learned this year, and I hope that you've never heard of this and it's new to you also. Would you be opposed to if someone asked to share that rental agreement that you have that was signed between my house and the company? Would you be opposed if we shared that if someone asked?
No, I've got a template that I could send out.
Okay, cool. So if you're looking for that rental agreement for an example, you're going to have to change it up, obviously, as far as your rates and what you're charging to rent out your house back to your company. So anyways, Addison, you're awesome. We appreciate you, everything that you do. We have just taken Caldwell County to the next level with Addison and Travis. There's no doubt about it. If you've eaten there recently, I hope you feel the same way. And if not, my cell phone is all over the internet. If you have any experience that is not a 5-star experience, get back to me absolutely immediately ASAP, and I will take care of it and make sure that you have a great experience. So, Addison, do you have anything else to say before we sign off here?
No, I appreciate you having me, Spencer. And at the end of the day, we just make good barbecue over here. But trying to help all the other stuff make sense while we do it.
Yeah, that's what it's about. As long as we're making the best barbecue there is, everything else will take care of itself. And that is what is important to us. And that's for another conversation. So, hey, appreciate you all. Have a good day today. Thank you so much. We'll see you.